Hello and welcome to another episode of the Mark Moss Show, where we talk about the decentralized revolution, talking about the way the world is changing, and we look at it through the lens of politics, finance, and technology. Now, I say it all the time, and I'm going to say it again. You might just be tuning in. Maybe you don't know, but I'm still going to say it either way. More than anything, what changes the world through thousands of years of history is technology. It's always technology that changes the world, whether it's something as small and meaningless as a horse stirrup, the gunpowder revolution. We can go all the way back with the creation of fire, right? I mean, all of these things change the course of humanity. And we're witnessing one right now, and that is the biggest catalyst to change the world. Now, the world is swinging from centralization to decentralization. Now, this happens on a 250-year political time frame, but it's interesting that on a 50-year time frame, we have a technological revolution that's bringing us exactly what we need for the 250-year political revolution cycle, which is a decentralized technology. It's pretty interesting. And of course, I believe that is Bitcoin. Now, a lot of people want to challenge me on that. I go speak around the country and even the world. As a matter of fact, I just spoke in Mexico City like 2 weeks ago. And man, at the end of my talk, the people crowd around me and they want to ask me about all types of things, cryptocurrency, because I talk about Bitcoin. And I've heard all these things But Bitcoin's backed by nothing. This is one I had to deal with someone who's a big fan, and he made this comment that it's not backed by anything. It's too volatile. It's too risky. It's outdated technology. It was started by the CIA. We don't know who Satoshi Nakamoto is. We're gonna hoard Bitcoin. Right? People say, Ethereum is better because it has this. So I hear all these things all the time, and so I bet if you tune in regularly, you probably have the same questions because I sit here talk about Bitcoin, and I don't talk about all these other supposedly technologically advanced cryptocurrencies because they do smart contracts on layer one or something like that. And so, or they have faster throughput, faster transaction times, and all these types of things. And so, you know what, I thought coming back from this conference I was at last week in Mexico City and I had to deal with a bunch of these questions, I took down a bunch of these ones that I was asked. And I thought, you know what, let me just answer some of these for you here. And maybe that'll be helpful. It should be helpful. I would highly recommend listening to them because if you don't, you could miss out on one of the biggest life rafts that we have. All right. So let's go through some of these. So the first one is, as I said, at this Nomad capitalist, someone came up to me and they said, "But Mark, Bitcoin is backed by nothing. It has no intrinsic value. It's not backed by anything." And I said, let's stop for a second and think about what that says right now. It's not backed by anything. What does that mean, backed by anything? So I'm asking you the question. I'm asking you to ask yourself that question. What does that mean to be backed by something? You probably haven't thought about it. You just recite that over and over. Well, let's break that down. So what does that mean to be backed by? Well, the dollar was backed by gold, right? So I had gold. Gold was too slow, right? It was slow for me to move gold from, New York to Germany, for example, or from New York to California. So the gold went into a bank. When I put the gold in the bank would give me a piece of paper, an IOU, a claim, a paper gold certificate that said, this paper is redeemable for the gold I have in there. It's like a claim check. And then what I could do is I could send you, or I could hand you that piece of paper, and now you have that claim, and you could go redeem that gold whenever you want. So that piece of paper that I handed you was backed by gold. It was debt. It was an IOU. This paper is backed by the gold that's in the bank. So debt is backed by the underlying asset. What was gold backed by? Nothing. Gold is gold. Gold isn't backed by anything. Gold is gold. Only the debt, only the claim on the asset has to be backed by something. So when you ask yourself, what is Bitcoin backed by? Bitcoin is backed by the same thing that gold is backed by. It's backed by gold. It's backed by Bitcoin. It's the same thing that any other real world asset is backed by. It's backed by that asset. That's it. Now, if I have a gold coin in my hand or a silver coin in my hand, I have the silver coin. What is that backed by? Nothing. It's just the silver coin in my hand. If I hand it to you, you have the silver coin. Only an IOU written on top of it. Now, but gold has intrinsic value, right? That's what Peter Schiff would say, right? Because gold, it has intrinsic value. You could use it for a filling in your tooth, and you could make cufflinks out of it. And I'm here to say that there is no such thing as intrinsic value. So, okay, sure, you can take gold and make a cufflink out of it, and you can take a gold and make a filling out of it. So you're able to use it for something. So there's usefulness to gold is probably what you're saying. So it's not intrinsic value, because what's the value of a cufflink? I mean, I can make a cufflink out of aluminum. I can make it out of steel. I can make it out of anything. I mean, most fillings aren't gold either. I can do fillings with other things as well, porcelain or whatever, right? So what is the intrinsic value of gold? There is no intrinsic value of gold. There's usefulness to gold. I'll give you that. So there is no such thing as intrinsic value. All value is subjective, and it's really broken down by two factors. One is scarcity, but also the need. So, for example, I use this story all the time. You've heard me say it. If I was on a deserted island with $1 billion of cash, $1 billion of gold, $1 billion of Bitcoin, but I had no food, no boat, no phone, no way to get off the island, no way to eat or whatever. None of that, the $1 billion in gold, cash, or Bitcoin is all worthless because I have nothing to exchange for that. So all of that is that gold is worth nothing. As a matter of fact, it's worth less than nothing because it's probably dangerous for me because how am I going to secure it? I can't swim with it, whatever, right? So there's no value to that. Now, let's say scarcity drives value. Well, not necessarily. What if there was one black rock on the whole island? It's the only one, but it's of no value to me. So who cares? It's scarce, but so what? I don't need it. Now, let's say that last night I had dinner, and I didn't finish my dinner, and I threw my leftovers away. Those leftovers, that little bit of water in my cup, I poured it out. That water had no value to me because there's just more water right there. So I just dump it out. No value. But if I was on that deserted island and there was a little bit of leftover food scraps and a little bit of water, I would probably give you the $1 billion I had in cash, gold, or Bitcoin for those leftovers. Now, those leftovers in the water were worth nothing last night because they weren't scarce and they didn't have any utility or value to me at that point. But on that island, they were scarce and they have massive value and utility to me because I'm dying of food or thirst, of hunger or thirst, right? Now, back to the usefulness of gold. So sure, gold could be turned into a cufflink and gold could be turned into a filling, or gold works really well for connectivity, for like audio, video, things like that, right? So gold does have usefulness. But Bitcoin also has usefulness. So you may not think so, living in your posh, downtown apartment, drinking your $20 cocktails at the bar. But if you're one of about 4 billion people in the world today living under double-digit inflation and authoritarian regime, Bitcoin has a lot of usefulness. As a matter of fact, let's say that you live in, so you live in a country that's in Lebanon. We were talking about Lebanon earlier. Let's say you live in Lebanon and they have such high inflation that you've lost all the purchasing power of your money and you can't even get out whatever money you have out of the bank. They're literally breaking into banks with weapons to steal their own money back out. If you live there and you have the ability to move your money into Bitcoin that the government cannot inflate away and cannot steal from you, there's massive value there. Let's say that I'm in North Korea and I need to get this good or service. I need to get this food. The government hasn't given me enough food, or I need to pay someone to get me out of the country, whatever. But I don't have any way to pay for that because they've blocked that. But now I have Bitcoin and I can pay for that. There's massive usefulness there, massive utility. You may not see the utility being in New York, but they do in North Korea. Just like I don't see the value of cufflinks because I don't wear suits, but some people do. Hopefully that makes sense. Backed by nothing is only for debt, not for assets. Intrinsic value, there's no such thing as intrinsic value. And all value is subjective. Now, once you understand those things, you can start to understand what money is, and you can start to understand the entire financial system and all the other assets that we have. I was just speaking at this conference in Mexico City, Nomad Capitalist, and it was Bitcoin is a perfect asset for a nomad capitalist. And what's a nomad capitalist? I mean, these are people who basically are trying to diversify internationally. You wouldn't put all your money in you wouldn't put all your money in one stock, would you? I mean, you shouldn't. So why would you have your whole life in one country? It's a good idea. Why not diversify? The United States, in my opinion, is still probably the best country to live in the world today. Best is a relative term. Best is different for different people. But I still think the U.S. is probably still the best country in the world. The U.S. Passport has been one of the best passports to have in the world. But during the pandemic, the U.S. passport became one of the worst passports you could have because the U.S., with its high numbers of COVID and et cetera, most countries didn't want to allow Americans to come in. And so all of a sudden, the U.S. passport was a horrible one to have. In addition, a lot of places in the world don't allow Americans to open bank accounts. So let's say that you did want to move to Bali or Thailand or Venezuela or Argentina or Brazil or Turkey or whatever, name the country. There's a good chance that they may not allow you to open bank accounts. And the reason they don't allow you to open bank accounts is because the IRS is so crazy and so restrictive. They don't want to deal with it. So, nope, sorry, you can't have it. There's a lot of places in the world, if you haven't traveled, this may come as a surprise to you, but there's a lot of places in the world that don't really like Americans. It's a sad fact. Now, I'm not anti-American. I'm making the case I still think it's the best place to live, which is why I still live in America. But I'm just saying there's reasons why you might want to diversify. So these nomad capitalists, they may want to move to another part of the world to lower their tax liability or to have a higher quality of life because it's cheaper. They want to have multiple passports just so if one of their passports doesn't work, they have other passports, things like that. And you can see opportunities. So, for example, I did want to go live in Bali or Thailand or whatever, but I can't open a bank account. I could use my other passport. Or I'm in a part of the world where they really don't like Americans. I could just travel on my other passport and things like that. So it gives me options. And so for somebody who's doing that, Bitcoin is a perfect asset for them because the problem with our money in the bank is we've come to find out through the trucker rally in Canada, we've come to find out with Russia, money in the banking system is not your money. It can be frozen and seized at any time, period. And unfortunately, many people around the world have to find this out all the time. We talked about Lebanon. They're finding this out. They can't get their money out of the bank. What about people in Ukraine? People in Ukraine, they're fleeing for their lives. What they can't take their real estate on their back. They can't carry their gold. The banks are shut down. They can't get their money out of the bank. There's capital controls. Like, what are they going to do? Or let's say in Russia, they're trying to draft people into the military. I heard lots of people are trying to escape Russia because they don't want to go into the military, which I don't blame them. And they're leaving Russia, but they have to leave all their assets. They have to leave all their real estate and their stocks and their money in the bank. And once they leave Russia, they'll probably never be able to get that money back out of the bank again. So for somebody who's in one of these regimes, you're in North Korea, you're trying to escape to South Korea where it's free, or you're escaping in Ukraine so you don't get blown up, or you're trying to escape Russia so you don't have to go into the draft, or you're in Lebanon trying to get your money out before the bank sees it all. Like, there's lots of situations happening in the world right now today that you may do this, or you just want to be a nomad capitalist and just, I want to set up residence in the Caribbean and set up residence in Brazil and Thailand, and I like to move around, and that's cool too. So what you want is the ability to have your assets with you all the time in a way that can't be seized or stolen or manipulated. So with Bitcoin, I can secure it cryptographically, and I have a key. Now, the cryptographic key is very long. It's a long string of characters and numbers. And think about it like this. Like, I'm sure most of you know what a locker is. You went to school, you had a locker, right? And your locker at school was like C19. And so, hey, my locker C19, go put this envelope in there. So I give you my public address, C19, and you can go there and you could stick an envelope in my locker. That's my public address. But then I only have a key that I can open that locker and move stuff around. So now I have the private key, so there's a public address and a private key. Now the private key for a locker might be a combination, right? I have to remember the combination. It might be a key. Now, for a Bitcoin is a cryptographic key, so it's very long string of numbers. You're not going to remember it, not like a 3-digit combination, right? So what you typically do is you have a device, we call it a wallet, that would sign that transaction for you. So you could download one on your phone, like from the App Store. And then when I use the app, I say send. The app basically works just like Venmo, right? It's just like Venmo. So I have Bitcoin, I want to send it to you, just like if I have Venmo and I want to send you money. So I would need two things from you. I need your address on Venmo or Cash App, it might be your username. And I would say send, and I would plug in your username, and I'd put the amount in, and I'd hit send. Simple. If I want to send to you via Bitcoin app, a Bitcoin wallet, it'd be the same thing. I'd put your address in there, and I would put the amount, and I'd say send. Simple. But that app, that phone, all it does is hold my private key. So that's all. So it signs the transaction for me. Now, there's a way to back up that key. So I can back it up, and I can use 12 words to back it up. So there'd be 12 random words: monkey, banana, ocean, ranch, steak, whatever, right? 12 random words. And so then I could delete that app, I could destroy it, I could get rid of it, whatever. And then I just know 12 words in my head. Now, the importance of this is that I don't need any physical device. All I know is 12 words in my head. So let's just say that I'm in Russia or I'm in Ukraine and I'm trying to run for my life so I don't get blown up. I don't need to run into my house and grab anything. I don't need to go get a device. I don't need to worry about losing my phone or not having access to my safe or carry something with me. I can literally just run. I carry it with me in my head. I could literally walk through a border or swim to another island naked. And when I get there, I could get onto a computer, I could enter my backup, and boom, have my entire key back with me right now. If that doesn't sound revolutionary, then I don't know where you're from. It solves the oldest problem in humanity. It allows me to have my property in a way that can't be stolen, and I can take it with me everywhere with no cost. Imagine if you had $1 million or $1 billion of gold. How do you move that? How hard is that to move $100 million of gold? How much does that cost you? How long does that take? But I can take $100 million of Bitcoin with me. Nobody would know. I know 12 words in my head. No border guard knows. I just have 12 words in my head. The government's going to make it illegal for you to custody your Bitcoin. Really? They're going to make it illegal for me to know 12 words? I know way more than 12 words right now. Like, they're going to make that illegal? That doesn't make any sense. So think about this. Get out of your U.S.-centric viewpoint and think about what's happening in Lebanon, in Ukraine, in Russia, in North Korea. Think about what's happening in the world and think about the massive demand that they have for this right now. With the most amount of pain comes the most amount of action. With an addict, they typically don't take action until they reach rock bottom. Well, in the United States, we may not be at rock bottom yet, but other parts of the world, they certainly are. And that's where the action, that's where the adoption of Bitcoin is needed, and that's where it's happening. And so, again, politics, finance, and technology. So we talked about in these other nations where there's political systems and financial regimes that are very extreme, authoritarian dictators, and then we have failing financial systems, then we need a technology. See how all three come together. Now, one objection that I hear all the time is that Bitcoin is too volatile or too risky. Kind of the same thing. So Bitcoin is way too volatile to be used as a medium of exchange. And because it's volatile, because the price goes up and down, it's too risky. It's too risky for me to put my money into Bitcoin because the value could go down. It's volatile, risky. Okay, let's talk about that for a minute. Let's look at it from two angles. So, again, if you're in the United States, is it too volatile and risky? Well, you could buy it for $40,000, or last November it was $69,000, and today it's at $20,000. So you could have bought some at $69,000, and today it's worth $20,000. Is that too volatile? Is it too risky? Well, it depends. It depends. Now, it depends on the U.S. person. Let's talk about it from another standpoint. Let's talk about it from the global standpoint. If you're in North Korea, where you're not allowed to have money, but, of course, people need money, and so the government doesn't give them enough food to survive, so they have all these black markets, and people trade in these black markets. And then they have to hide the money somewhere in their mattress or in their wall or something, and then the North Korean police come through, the military come through all the time and search people's homes, and if they find anything, of course, they steal it. So if you're there in North Korea where you're not even allowed to have money and you're hiding it wherever you can, but anytime they any chance they get, they'll come and try to steal it from you. And if they steal all your money, then you're back to square one and you could die because you don't have enough food. If you're in North Korea, is it too volatile? Is it too risky to put your money into Bitcoin, an asset that they can't find because it's digital and they can't steal? Is it too volatile or too risky then? I would say that it's too risky not to try something like that. That's an extreme example. What about Lebanon? What about Turkey? The Turkish lira has dropped almost 90% to the US dollar. They've lost almost 90% of their wealth. And because of strict capital controls, they can't get out of their currencies. So they just lost 90% of their wealth. No big deal, right? Well, 90% is worse than the 65% that Bitcoin's down. So is it too volatile and risky if you're in Turkey? Or Lebanon, where now they literally have to break into banks with weapons to steal their own money out. Is it too risky or volatile to try it if you're in Lebanon? I would say the answer is no. If I was in North Korea, Turkey, or Lebanon, I would be dying to get into Bitcoin or anything that you could get into. Of course, it's hard to get into anything, which is why something like Bitcoin works, because it's completely anonymous and digital, and there's no way to stop it. They can stop the flow of US dollars, right? They can stop gold, but they can't stop Bitcoin. What about in the UK? The UK just had to get bailed out by the Bank of England. They had to bail out the pension funds, and their pound sterling crashed against the dollar, and people are trying to get out of the pound sterling as fast as they can. They went into gold. They bought all the gold out in the UK. They've been buying lots of Bitcoin. So is it too volatile and risky if you're there? So I think people that ask that question would be asking it from a U.S.-centric viewpoint without understanding that the U.S. only makes up about like 4% of the world's population. I hate to tell you that if you're an American. I'm not sure if that's the exact data. Is that right, Dan? 4%? 330 million people of about 8 billion or 9 billion. So it's about 4%, I think. So we have this U.S.-centric viewpoint. Oh, Bitcoin has no use case. It's too volatile, risky. Well, it is for you, but you make up 4% of the population. What about the other 95% of the population of the world? What about half of the world that live in these authoritarian regimes with double-digit inflation? Is it too risky for them? Now, let's talk about it from a U.S.-centric viewpoint. So it's too volatile and it's too risky. For what? For what? I would agree. I'll agree that Bitcoin is too volatile to put my rent money in that I have to pay in 2 weeks. I'll agree with that. Is it too volatile and too risky to put 5% of my investable net worth in? So those are different questions. So Bitcoin is volatile. The price goes up and down, and that's a good thing. How could Bitcoin have gone from $0 to $20,000 if it wasn't volatile? Volatile works both ways. It goes up and down. So you could buy Bitcoin at right now $20,000. If there's no volatility, then it means it never goes up, never goes down ever again, which would be fine because then at least the network still works. But back to the point. So it's volatile, could be a good thing or it could be a bad thing. Again, it depends on your viewpoint. So again, if I put my rent money into it, I need to pay in 3 weeks, and all of a sudden the price crashes. Let's say it's at $20,000 a day. I put my rent money in, and when I need to pay my rent in 3 weeks, it's at $10,000. That's risky. It is. That's too risky. I would agree with you on that. So don't do that. Don't do that. Think about it in a long-term perspective. Now, I kind of got a benefit. The world really has this short-term mentality today, but I benefited because when I started my career, when I was 18 years old, I started buying real estate. And at first I was fixing and flipping homes, and that would be a 6-8 month process. But still, that was 6 or 8 months. So I was kind of looking at projects, 6-8 months, sometimes a year out. But then I started building from the ground up. I'd buy a piece of dirt, have to rezone it and build. And those would take 5 years. So I kind of look at the world in these like 5-year periods. I've started a bunch of businesses. Businesses typically take 3-4 years to kind of really get up and stabilize. So I kind of have like this 5-year viewpoint on things. You hear Michael Saylor talk about Bitcoin. He talks about it in a 10-year time frame. So he's like famous for like buying Apple in 2012 and making all this money on Apple. He called like this whole mobile revolution. So he looks at things in a 10-year time frame. He's a billionaire. I'm not. I need to get up to a 10-year time frame, and you need to get up to a 5-year time frame. The further ahead we can look, the more money we'll make, the better we'll progress. So in a 5-year time frame, or let's go to a 3-year time frame. There's never been a 3-year period where Bitcoin has been down. So if you would have bought at the peak of 2017, December 2017, before it crashed, if you would have held 3 years, you would have gotten back to that value. So is it too volatile for my rent money in the next 3 weeks? Yes. Is it too volatile for money I need in 5 years? Well, history says no. Now, as to the too risky part, again, if you're in Lebanon or you're in North Korea or you're fleeing for your life in Russia, it's not too risky. It's too risky not to try something else. If you're in the United States, is it too risky? Well, maybe. Would I put 100% of every single penny I have in it, and I'm just going to roll the dice and Hail Mary it? Well, it's probably too risky for that. So I'm definitely not advising that. I think a 5% allocation is a good allocation. It gives you enough because of the volatility to the upside, the way that Bitcoin rises. If I have a 5% allocation, it allows me to capture all of the move. But if I lose 5%, or let's say that it cuts in half, so it goes from 5 to 2%. If I lose that, it doesn't really affect me that much. It doesn't really change my life. Does that put too much risk on me if I would potentially lose 2% of my net worth? No, not really. So the too risky, you can manage that. Now, like I said, if you're in North Korea or Russia, It's too risky not to. But in the United States, we have a different situation. So it's too risky if you put all of it in, and it's too volatile for your rent money in 2 weeks. It's not too volatile if you look at over a 3-year, 5-year, 10-year time frame. Now, as Bitcoin continues to get more adoption and the market cap continues to go up, the volatility will inevitably go down. We've already seen it. So the Bitcoin volatility has gone from 95% drawdowns to 90% drawdowns to 85% drawdowns to 80% drawdowns. Now we're at 70% drawdowns. So it's already getting less volatile. We're seeing it, and that will continue. So just because something isn't that today doesn't mean it won't be that in the future. So Bitcoin could. I'm not saying 100% guarantee it will. I think it will, but we don't have a guarantee. I think that over the next 5, 10, by the end of the decade, the Bitcoin market cap will be big enough where the volatility will have slowed way down. Still probably not to put my rent money in for the next 3 weeks, but much, much, much more slowed down volatility. When I talk about this, when I speak about it, I was just speaking on a stage in Mexico City, and I talk about Bitcoin, and everyone says, well, what about crypto? What about Ethereum? What about the merge? What about Cardano and Solana and blah, blah, blah? And I have to go stand in the back for like an hour and answer all these questions. And I thought, you know what, let me just answer them for you here. So coming back from this conference and being fresh on some of this, I thought I'd talk about some of these big ones. And so let's talk about a couple more. So I love this one because this one just shows you have not been paying attention at all, and you're like still pulling out arguments from 6 years ago. But I love this argument that Bitcoin is too slow. Bitcoin's too slow. Bitcoin is too slow for what? Well, it's too slow to be used for everyday transactions. So Bitcoin is like gold, you know, gold is good for like big transactions, but then we need like a silver. Silver is used for like smaller transactions, right? So like Bitcoin could be gold, but then maybe Ethereum could be silver, or XYZ, XRP could be silver, or whatever, right? And so there's that argument. Bitcoin's too slow. Well, let me talk about a couple of things there. So first of all, the world has a lot of problems, and solutions are supposed to come to problems. Hopefully solutions solve some of these problems. Now, there's some problems that, like, you know, if they get solved or not, it's not a big deal. And some problems could change the world. Okay. The world does not have a problem because our money is too slow. It's not a problem. The world doesn't need faster money. As a matter of fact, PayPal, Venmo, Cash App, like they're pretty dang fast. So the problem that the world is trying to solve is not faster money. So first of all, saying that Bitcoin is too slow, it's not the problem it's here to solve. Okay. We can talk about the problem it's here to solve, but that's not it. So first of all, that argument I think is a little bit wrong. But second of all, let's take it. Let's take it. We'll take it. Come on. Bitcoin's too slow. Okay. So Bitcoin on the base layer, on the blockchain, it takes about 10 minutes for every block to go through. So it can take time for that to go through. So if I'm at the store and I want to buy my Starbucks caramel macchiato, I don't want to sit there and wait for 10 minutes for that transaction to get full confirmation. Now, typically, you don't have to get, full confirmation, so you could leave earlier, but let's just go with that. So I don't want to wait 10 minutes. Okay. Well, what you may not have heard if you're making this argument is that Bitcoin scales. All technology scales in layers, just like our financial system scales in layers. Remember, on a gold system, gold was very slow to settle. And so we'd add a debt instrument on top of it, a paper certificate, and that was faster and easier to move. But it was a layer 2. And then we added checks on top of it, layer 3, and then we had credit cards on top of it, layer 4, and then we put Venmo on top of it, layer 5. So it scales in layers. Each one of those has a trade-off. So we can choose what we want to do. Now, Bitcoin has its base settlement layer, and then we can scale on top of it. Now, here's why I want to do that. Now you're listening to this going, yeah, but other base layers don't need a second layer to scale. So other base layers like Solana or even Ethereum, they're faster than Bitcoin or Bitcoin Cash. Bitcoin Cash is the true Satoshi's vision. It's faster. Well, the problem is that in order to get more of one thing, and this is Vitalik Buterin, the founder of Ethereum, came up with something he calls a trilemma. A dilemma is I have to choose to get more of one, I give up more of another. A trilemma is similar, but it's 3. So to get more of one, I give up the other. And so we have speed, decentralization, and security. So to get more of one, I give up more of the other. So Bitcoin Cash or Ethereum or fill in the blank, whichever one, XRP, whichever one's faster. In order to get more of the speed, they've given up something from the other side of the two, security or decentralization. And here's the problem, is that those trade-offs should be made on layer 2, not on layer 1. The reason why is because I can make that trade-off on layer 2. So if you're not aware, if you're making this argument that Bitcoin is too slow, you maybe don't know about Lightning, which is a layer 2 application on top of Bitcoin. I can send Bitcoin faster and cheaper than any other cryptocurrency out there using Lightning. But that's Lightning. It doesn't matter. I'm still sending Bitcoin faster and cheaper than any other cryptocurrency. So any other cryptocurrency out of the whatever 20,000 that are out there that say, but they're faster or cheaper, they're irrelevant now. Now, yes, this works. It's worked for a long time. It's been working since about 2018. I have used it extensively. I've done a lot of work in El Salvador. You can go to my YouTube channel and just search Mark Moss El Salvador. You can see some videos I've put together. And you can walk around and you go to your coffee shop. You can go to Starbucks or McDonald's in El Salvador. It's illegal. Bitcoin's legal tender, and they'll ring up your McDonald's and they'll show you the little point of sale system with a QR code. You open up your Bitcoin wallet, you scan the QR code, it tells you, whatever, $4. You hit send. Before your finger even comes off the button, they already have the transaction for like a penny, less than a fraction of a penny. So it works. So if you're saying it's too slow, that's a 2017 argument. That problem's been solved years ago. There's lots of transactions happening on it. A whole nation's running off of it. And I've personally used it many times. You can go search Mark Moss on YouTube, search Mark Moss El Salvador, and you can see the videos of that working. So it's not too slow. And remember, the slow wasn't the problem. Now, back to the trade-offs. So what Bitcoin Cash and other ones have done is to get more speed, they've given up decentralization. But the revolution is decentralization. So they've given up on what the revolution is. So we make the trade-off on the second layer. So let me explain this to you. So using Lightning is less decentralized and less secure because it centralizes the transaction. What it does is it batches them, sort of like if you're a merchant and you accept Visa or debit cards, it runs the transactions all day. At the end of the day, it batches them up and puts them all together at once, right? So Lightning does the same thing. It batches the transactions and puts them all at once. And that creates some centralization. So there could be some manipulation there. Potentially it gives a weak point. Maybe if somebody wanted to steal that or manipulate or change it, there's a small potential risk there, okay? But I'm okay with that trade-off. If I'm buying a $4 cup of coffee, I don't need that to be censorship resistant and immutable for all of eternity. It's a $4 cup of coffee. So I'm happy to make the trade-off and sacrifice security and decentralization for the speed, for the coffee. That's a good trade-off. But if I'm selling you a car, I'm selling you a collector Ford GT that's worth $1 million, and you're going to pay me in Bitcoin, I want that to be on the main chain. And I'm more than happy to wait 10 minutes for that to go through. So I get to decide, do I want the security and I'll spend the time, or do I not need the security and I won't have the time? I can make the trade-off. And then we can make all types of trade-offs on other layers, second layers, third layers, fourth layers. And there's all types of trade-offs we can make, but we don't sacrifice the base layer. The problem is if we sacrifice on the base layer, you can't go backwards. So if I make the base layer less decentralized and less secure to get the speed, on layer 2, 3, 4, 5, 6, I can't reverse it. I can't make it go backwards. I can't make it more hard. And so that's why we don't sacrifice on the base layer. Bitcoin is not too slow. Anyone who says it's too slow hasn't paid attention for at least 5 years. And anyone who says it doesn't work hasn't ever used it and certainly hasn't gone out of the country to use it like I have. And again, you can go watch those videos on YouTube. Just search Mark Moss El Salvador. So Bitcoin's not too slow. You're listening to the Mark Moss Show. We're talking about the decentralized revolution, talking about the way the world is changing. And I really believe it's Bitcoin that changes the world. It is the technological revolution, not a new technology. Technological revolutions are different. A technology is cool. It takes an iPhone, it takes a computer and a phone, puts them together. Cool, I get an iPhone. A technological revolution changes the way the world works, and it drives financial markets. Industrial revolution, steam engines and railways, steel and electricity, oil and automobiles, microprocessors and telecommunications, and now we have Bitcoin and the decentralized revolution. And I might just say, maybe a shock to you, not everything needs to be decentralized. The money needs to be decentralized. But anyway, that's what I got. You're listening to the Mark Moss Show. Appreciate you listening. Hit me up on a message on social media at @1MarkMoss. Let me know you're listening. Ask me your questions. And that's what I got. Thanks so much for listening.